right, let's take a look at inflation in the restaurant industry and if prices on the menu have actually stabilized. Joining us right now is Cameron Mitchell. He's the CEO and founder of Cameron Mitchell Restaurants, and we've been checking in with him routinely since the pandemic. Cameron, I want to thank you for being with us today.
Thank you, Becky. It's a pleasure to be with you.
All right, let's talk a little bit about what you're seeing. And let's put this in the context of the Federal Reserve, what they're doing right now. We've got a jobs report coming up tomorrow. The Federal Reserve has basically said they're not so worried about inflation anymore, that seems to be the part of their mandate that looks good from their perspective. They are more worried about the labor market and some softness there. Does that match up with what you see in your restaurants across the country?
Yes, I think so, Becky. We are... all of our inbound costs are much lower than they were before. We have raised our prices this year. Typically, we raise our prices about 4% a year. There is some consumer stress there, so we've only taken 2.5% price increase this year. But we think, inflation is slowed down. Interest rates coming down certainly will help us. Certainly will help us on our interest expense as we move forward. So we're fairly optimistic about going forward here, and especially into 2025.
What do you see from consumers at this point? Are they willing to spend on things like wine, on desserts, on appetizers?
Yeah. So we've been in business 31 years, and we only have had negative same-store sales a couple of those years. The Great Recession, '09 was one of them. Obviously, COVID is another one. This year, we've experienced a drop in our fine dining sales of about 5%. Meanwhile, our more casual segment restaurants are up 1 or 2% for the year. So company-wide, we're down in sales this year about 3.5%, a little under 4%. The good news is, I think September we just finished up, and for the first month this year, September was up 2% over last year in sales, same-store sales. So we'll see how that holds for Q4 going forward here.
Cameron, if this has only happened a few times where you've seen sales down, I mean, the other two times you mentioned were the Great Recession and COVID. Do you think what you're seeing now is a harbinger of worse things to come, or is this something where, look, we're coming off such high numbers, maybe it's not shocking to see the decline? What's it feel like to you?
Yeah, no, I think it's the latter, Becky. I think it's just a reset out there. In 2021-22, there was such euphoria out there. COVID was over. There was so much money out there in the system, and people were spending in jubilation and so forth. And so now in 23, inflation hits, interest rates rise, people start to pull back, which is natural, and it's just a resetting, I think, of the economic environment for us. We look at 2025, now 5 years out from COVID. The past 4 years, in our opinion, are all a result of COVID, and I think 21 and 22 sales were inflated. They weren't really normal. Our guest counts are still, to this day, above 2019. So I think we're okay. This is just a natural resetting that's going on right now, and people, for the time being, gravitating down towards a lower end check. But I suspect we'll hopefully 2025 we should be back to normal, I think.
And you're continuing to expand in this environment. You have 4 restaurants that either opened or are scheduled to open this year. What about next year?
Yeah, we have 5 next year. Now, keep in mind, restaurants take a year or 2 years typically to open. So the restaurants we're opening in 25, we close those deals in 23. By the time you get design, permitting, construction, now you're into 25. So right now, we're working on 2026 development, but we're being very cautious on that for the time being. I want to get through the end of this year before we sign any more commitments for 26 and beyond.